What is going on, everybody? Welcome back to Trading Learning 101. Today we're going to talk about chart patterns and one specific chart pattern, wedges. We're going to show you different kinds of wedges, bullish and bearish. We're going to show you failed breakouts, a couple different ways you can look at wedges. I have a lot of pictures saved, so let's jump into it. As a day trader, swing trader, short trader, doesn't matter. When you're looking at charts in the stock market, you're gonna see a lot of patterns. You're gonna see U-shapes, wedges, and there's different kinds of wedges, and people have different names for wedges. You have ascending wedges, descending wedges, rising wedges, falling wedges. Pretty much at the end of the day, when I look at patterns, they're all the same. When I look at patterns also, I always try to look at patterns always as they're 50-50. I don't really see patterns as bullish patterns or bearish patterns. In the stock market, and with it being so random at times, you don't know really 100% what's going to happen. That's why I say a lot of times, and this is just me personally, it's a coin flip. It can go either way, up or down. I've seen bearish patterns fake to the downside and shoot up. I've seen bullish patterns fake to the upside and rip down so many times and lost money, made money. That's why I always refer to patterns as a coin flip. But when they do work, it's a beautiful thing. Now I'm just gonna show you a couple pictures to get the example clear to you guys. You can see here they have a bearish rising wedge right here. They call them expanding triangles, bullish expanding triangle, bullish falling wedge, and these are some examples. And then we have symmetrical triangles, ascending triangles, descending triangles, more symmetrical triangles, bullish and bearish, ascending triangle pattern, descending triangle pattern, symmetric triangle pattern. See, there's all kinds of different names. And sure, you can be very technical about this and be very textbook about them. But for me, I'm not. A wedge is a wedge, and that's how I like to view them on charts. Sure, there are different wedges and bull flags and pennants that could happen when a stock makes a sharp move up and it gets its first pullback and forms like a bull flag, for an example, and then continues higher. I always, and this is just a personal preference, I always look at triangles, symmetric triangles, wedges. They're all the same for me. But we're gonna go over some triangles from charts through my career, and we're just gonna go over them in this video. And we'll start with this one right here. On a 1 minute time frame, we have a descending wedge forming. Going back to what I was saying, this could be 50-50. It could either at the very end break to the downside, or it could break to the upside. With this example, it broke to the upside. From $7 up to $7.80s it ran up to the high right over here. And this is a very bright one back from when I used TC2000, but we could see right here it was in a range going back and forth, all right here, range going back and forth. This did also form this big wedge right here, looking like it was gonna pop up and keep going, but it fell down, and it even fell out of the range that it was in right here and continued going lower. And here's another example with a lot of patterns on it. Head and shoulders, rounding tops, and we even have a little wedge right here, an ascending wedge. And you can see how it just got tighter and tighter, and it popped up and broke out from it, and then it came right back down and pretty much hung around the area it broke out from, all right here, having one more test up to that high up there until it just fell apart and fell back down. Charts and stocks all have different personalities, and they all move differently. You have to look at charts and stocks as if they're people. They're all gonna move their own way. Now here's a big wedge on ticker symbol 10 on the 5 minute time frame. We got this big wedge right here forming on it. Then we get a big gap up the next day on it, and it even formed a wedge right here. Formed a wedge, broke below it, and then you see how right here it acted as resistance. Depending on if the wedge breaks to the upside or the downside, after it breaks out from that wedge, always look for the stock to come back to the area it broke out from on the wedge and either hold as support or resistance. In this instance, when we got our wedge right there and it fell below it, and when it came right back up, it found resistance right where it broke out from to the downside on this wedge, but it continued to hold all right here, forming higher lows, and it was able to shoot right back up. Most likely shorts piled in on this because this is pretty much a textbook bearish pattern. It broke below the wedge, it was holding as resistance, but the bulls were able to keep it up, getting it tighter and tighter and tighter with all of these higher lows. And when a stock goes up and you have a lot of shorts in on a stock, what do they got to do? And what's happening when the stock is moving up? Those shorts are losing money. So the only way they have to cover is to buy to get out of their position. And when you have shorts covering and buying, and then you have longs buying also, I like to call it a double whammy. When you have a double whammy, that's when you can get a big surge on 10 right here like it did. And this shot up from $10 up to $10.60. So just a nice little fast short squeeze on it is all it had. And then also what I want to point out with this is a good chart with this wedge, you know, how it found resistance right there, and then it was holding as support all right here, but then it fell below, and then it was holding as resistance once again right there. So you see how stocks move like that. What I also want to point out, if we zoom out on this in the big picture overall with this wedge right here, when it broke to the upside and it did all of this stuff right here, when it ultimately came all the way back down, it bounced right there at the area where it broke out on this wedge from way back here. So having an eye for detail and paying attention to stuff like that will separate you from the sheep. Here's another long wedge, and this is on a 5-minute chart of 10 again. Very long and dragged out wedge right here. And this is a good example on TROV. This is a 3-minute time frame. Let's take a look at this. TROV right here formed this very nice wedge right here, a little descending wedge, and then pops out of it, runs up, gets a nice little pullback, consolidates, continues moving higher, and it came all the way back down. And look at the area all where it bounced at right here. It bounced at the area where it broke out from right here, and it bounced right there, and it bounced right there, and then it finally fell below, and it was acting as resistance right there. Very good chart right here. And I encourage you guys to do the same thing. Every day you should be taking pictures of charts, breaking them down, and getting this little tool called Epic Pen right here. With this Epic Pen, and I'm not affiliated with Epic Pen, but you're able to draw your lines easily with it. You could draw circles, squares if you wanted, and you can even write on the charts if you wanted, and you can make it bigger if you wanted, really big if you wanted, and you can draw freely too if you wanted. And if you wanted a whiteboard, boom, there you go. Get your whiteboard or your blackboard out. I don't want to do the whiteboard because I don't want to blind you guys, but you can draw on it freely if you wanted or do what you wanted. But Epic Pen, I highly recommend it, and it's dirt cheap. You can either get a free version or pay like $10 and you get it for a lifetime. I use it all the time when I'm in the stock market. Here's another example on MRSN. We have our wedge right here. Stock breaks out from the wedge from 1850 and runs all the way up to 2075, and then look it slowly comes all the way back down and bounces right at the area it broke from on this wedge right here. And from 1825 got another opportunity and a bounce all the way up to 1925. A nice little $1 bounce on this. As a trader, you're always looking for wedges on charts. 1-minute charts, 5-minute charts, and so on. And look it, there's a nice little small wedge right here too. Nice little wedge, probably could have popped over VWAP and ran up to 1925 and 1975. And wedges come in all different shapes and sizes. There's 2 wedges on this chart right here. One right here, it found resistance at $9, a little ascending wedge right there, looking like it was gonna squeeze over 9, but it failed and fell down. And then we have another wedge right here, connect all the higher lows on it, or lower highs, from $6 pops up to $7.25, and this probably ran all the way up to $8.25, where it dropped below right in this area. Here's another wedge, a descending wedge. Connect all of the lower highs right at support right there, and it fell below it. And then here's another example. You have a wedge right here, it broke below it, and then when it came right back up, this right here acted as resistance from where it broke below the wedge and continued going lower. Now let's take a look at this descending triangle here. There's a couple ways that you can trade triangles. There's a couple ways. You could trade the range on it, buying and selling at support, selling at resistance, like that, just back and forth. The first way you could trade a triangle, you can, on the breakout, get your entry in right there, and then your target is like the pole of the triangle. So you see this big fall right here, forming the base of the triangle from the top. That would be your target right there. And look at, if it ran right into it right there. So your target would be up here. You could trade it on the entry of the break of the triangle. Or what I personally like to do, I like to let it break above the triangle and then get a pullback. And if I see that pullback is strong and it's holding the area it broke out from the triangle, I'll look for an entry and sell at the target up here. And I have an example on another chart I will show you again. Here's another example, but I didn't draw it out. Just simply connecting all of the lower highs on this right at VWAP, forming a descending wedge, breaks down below it, comes right back up, and look at right where it found resistance, right at the tip of where this wedge was, and then held below it, and down she goes. There's even a little wedge right here also. There's wedges all over on charts, everywhere. Here's another example, and there's a few wedges on this. There's a little wedge right here. There's a wedge right here. There's one big long drawn out wedge on this, like that. And let's move on to this one. Now this is what I was talking about, the wedges that I personally like to trade. When I have a wedge forming like this, sometimes I'll get in at the entry of the wedge breakout, but you gotta be careful with that, because a lot of times I've seen fake outs. It'll look like the wedge is going to break out and above, and they'll pop it up, and the market makers will slam it right back down and drop it hard and fast. So there's a bit of a risk with getting in and chasing that wedge breakout. And this is where it comes in, where I like to try to trade the pullback on the wedges. You could see it broke out right here, and then it got this pullback right back down to the area it broke out from the wedge at 270s. And from 270s, this popped right up to 290s. And again, you'd be using the pull of the wedge as your price target. Look at right there at around 290, and this shot right up to it right there. That would be your price target, with your risk below the wedge right here. And here's another example of another wedge that I've pulled from the internet. It's showing you a couple ways that you could trade it. When it breaks to the upside, entering in there, taking your profit right there. Or if it breaks to the downside, you know, entering in there short and taking your profit down there. Me personally, I don't like trading this type of wedge. I like playing the pullback on the long side when the wedge breaks to the upside. So if it would break out there, get a nice little pullback, and it's holding the area it broke out from and looking to shoot higher up. That's what I like to try to look for and trade. And this is just one trading strategy, guys, out of multiple different trading strategies that are out there. One more example here This is a 10-minute time frame of DKNG, DraftKings. On the 10-minute, had that double top right there. Connect all of the lower highs right here. Connect all of the higher lows. Look at that nice big wedge that it's forming. Got its nice little pop up. And look at, even with that wick right there, it pulled right back to the area it broke out from on the wedge at 38. And from 38, she gets a nice run all the way up to almost $40 right there. Finding resistance where it found resistance all right over in this area. This is a beautiful textbook wedge breakout right here. This is a A+ setup. That's one of my favorites. And here's another wedge breakout on a line chart that I've pulled from the internet. Making higher lows, has its big resistance up here. Stock breaks out and never looks back and just keeps going and going and going. And you'll see that at times with wedges. They won't ever pull back at all to the desired area you want it to. Like I was just saying, what I like to look for it to break out and get that pull back down to the area of the wedge, sometimes they'll just break up and just keep going and going and going like it did here. You can't be mad or upset that the stock never pulled back for you. You just have to accept it and move on. Other opportunities are out there. Now we got 3 of the basic triangle shapes, and I'm gonna read this for you guys. Symmetrical triangle. These are formed when price makes both lower highs and higher lows. Because of its shape, these triangles can be either a continuation or a reversal pattern. And you could see this was in a downtrend right here. It formed this symmetrical triangle, bouncing off of it, and then it reversed and wants to go to the upside. This one was in an uptrend. It formed this symmetrical triangle, pulling back, consolidating, and continued moving even higher. Then we have ascending triangles. These are formed by a flat top or equal highs and higher lows. These triangles is a bullish pattern that can be a continuation in an up move or a reversal at support on a down move. So the stock was in a downtrend and it formed this ascending triangle, moving up and down in it, and it reversed and continued higher. This one was in an uptrend, consolidating, and then moves higher. And then we have a descending triangle. These are formed by a flat bottom or equal lows and higher highs. This triangle is a bearish pattern that can be a continuation in a down move or a reversal at resistance on an up move. So we had this stock making, it was in a downtrend and it found a bottom right here. And then it's consolidating, forming this wedge here, and then it just continued lower. And this is the area where I say it can be 50-50 with these patterns. This very well could have reversed and went to the upside, but it consolidated here, making this wedge, and it continued lower. And then we have this last example here. The stock was in an uptrend, then it consolidates in this wedge, and then it reversed and it went lower. And then we have AAL here. This is a 1-minute time frame. This is a very, very big ascending wedge here from 1060s up to that mental $11 area up here, all the way up just going into the end of the day, and it gets that move to the upside from 11 up to 1140 and then consolidates the rest of the day. This is a very, very big wedge right here. This is a lot of patience right here. And then when it finally made its move up, it consolidated. AAL, American Airlines, with bigger float stocks like this is pretty much typical. The float is so big compared to low float stocks. You're gonna see a lot of consolidation and then moves, consolidation, move, consolidation with larger float stocks. With larger float stocks, always think about accumulation, distribution. Accumulation, distribution. And then we have RCL here. RCL, Royal Caribbean Cruises, was in a downtrend, found its baseline right here, connect the higher lows on it, got very, very tight, and then broke to the downside. and continued going lower. Here's a nice one. There's wedges all over on this one. We'll start right here. We got a wedge running into another wedge, gets its move up, consolidates, starts to putter out right here, fakes, breaks down to the downside. And what's cool about this is shorts probably thought that this was done for and all piled in, when only it's bouncing right at the area it broke out from this wedge right here. Right back up, reclaims, and off she goes. From 530s up to 570s. And then it's forming another wedge right here. And then this is a good example with CODX. It's a light volume stock, and you could see it clear as day. Even connecting all of the lower highs on this, the higher lows, this broke out right here, and then it retraced, and it came right back down and bounced right at the area it broke out from the wedge. And from 1730, this ran all the way up to $18. This is the type of plays that I love to look out for as a trader. And this is going back to when I was saying there's two ways that you could trade this. You could trade it at the break of the wedge for a quick scalp and sell up there, and then wait for it to retrace back down to the area it broke out from. See if it's strong and it's holding, which it did, re-enter, and it shoots right back up. And remember, you want to try to use the pull of the wedge as your price target, either on the long or the short side. And there's something I want to add with the wedges video. Now, wedges and triangles can happen on all time frames. It doesn't matter. 1 minute, 5 minute charts, 30-minute charts, daily charts, weekly charts, monthly charts. It doesn't matter. And I want to give this example with red here. We're looking at the daily chart, all from connecting the higher lows here and connecting the lower highs. There's two wedges. We got one from the top right here forming a big wedge, and we got one right here connecting a wedge. So a wedge within a wedge. And I want to show you another example. On APT, there's a wedge right here too. If we just simply switch over to the weekly chart, you can see a wedge forming right there. Draw your trend line up like that, and then connect your lower highs. Look at that wedge right there. So I wanted to add this in the video to show you guys and tell you guys wedges can happen on all time frames, from a 1 minute all the way to a daily, monthly, weekly chart. So whenever looking at charts, always keep an eye out for wedges. And as I always like to say, be a scientist. You're testing, 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 refining, testing, refining, refining, testing again. It's a never-ending process. Always try to look at charts as an art form. This is not a science. You have to look at it as an art form. And the most important chart, and especially with trades, it has to make sense to you. If it doesn't make sense to you, then it's not a trade. It may make sense to somebody else like me, and I could trade it. But if it doesn't make sense to you, stay away from it. Always try to stick to what makes sense to you. And that's going to wrap it up. That's all of the wedge pictures that I have. I hope you guys like this video. If you're new to the channel, please hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders and investors. If you liked this video, hit that thumbs up button for me. It lets me know that you guys enjoy the content that I am creating. Feel free to leave a comment down below. What are some of your favorite trading strategies? And what are some of your favorite patterns? What are some patterns that you want me to make videos on? Until next time, everybody, have that patience, have that discipline, and study, study, study. Later, everybody.
The most valuable commodity I know of is information. Wouldn't you